Uh, um, Thank you, Chidose, for this opportunity to come in again. Um, you know, the whole essence of implementing international financial reporting standard, bringing everybody to the same reporting framework, all of the effort altogether is to achieve trust in and reliability of numbers, and to enable people to be able to place confidence on the numbers that are presented to them. Also, let's bear in mind that these numbers and these reports are used for different things. Even investors are looking at this number. So investors, investment analysts are looking at this number. Imagine that all of the numbers put together were fraudulently made up, and as such that are unreliable. So these are areas where ethical considerations become really very, very crucial. So ethical considerations and challenges in financial reporting, they have utmost importance, especially when it comes to ensuring transparency and integrity in financial disclosures. So let's get into it. Transparency, for example, is crucial because it allows stakeholders, investors, and the public to have a clear understanding of the company's financial position and performance. So it enables them to make informed decisions and trust the information provided. So if they can't trust the information, it presents a very, very big problem. So ethical financial reporting involves presenting accurate and complete information without any intentional misrepresentation or omission. Okay. So one of the key challenges in financial reporting is the temptation to manipulate financial statements to present a more favorable picture. And we see these things happens not to even globally. Okay, so and you want to. I know there's an ex-president of one of the leading Western nations that is in court on this same issue. Okay, so inflating the assets to enable investors or lenders to give more loans and whatever. So these are the pitfalls, and ethical organizations, they want to ensure that their word is their bond. When you put out financial statements, you could actually trust it. Okay, so that is the place to be. Okay, so one of the I've talked about that. So you can include inflating revenue. Some may want to minimize understate expenses so that profit will increase. Okay, so when this company is profitable, but expenses have been understated, or revenue has been bloated, or sometimes increasing the asset or reducing liability and making it count as profit. So all of these manipulations can mislead stakeholders and can harm the overall trust in the financial reporting processes. So maintaining integrity in financial disclosure is equally important. Apart from the numbers themselves, disclosure of information, things that investors should know. Sometimes regulators enforces these disclosures by ensuring that it is stated on the financial reports when there's an infraction. For example, I know central banks across domain, they force you to include it in those. So, but it behoves of an organization not to even wait until they are enforced by regulators to make disclosures that are complete and that will aid investors to take decisions. So it means adhering to ethical principles, being honest, and acting in the best interest of stakeholders. It involves reporting financial information accurately, even if it may not reflect positively on the company. Yeah, sometimes, but that is your picture. You should present a, a reliable picture, even if it will not help you to achieve what you want to achieve in terms of lending, in terms of investment or what, but ethical consideration must be overriding. Okay, so integrity means avoiding conflict of interest and ensuring that financial reporting is not influenced by personal gains or bias. So to address these challenges and ensure ethical financial reporting, companies need to establish robust internal controls. This takes me back to what I was saying earlier. And then to implement rigorous auditing processes and adhere to accounting standards and regulations. It's also essential for companies to foster a culture of transparency and integrity. Okay, there are some names, very few though. When you see their financials, you can trust it because they even report themselves. They even before the public gets to know of issues, they come out to disclose. And they even come out to tell you that, hey, our income may not be as robust as you might be projecting, or as robust as we had earlier forecasted. So all of these are ways and means to engender trust, okay, and adhere to accounting standards. And, it's very, very key. So where employees are also encouraged to report any unethical practices. There are organizations that have whistleblowers, so if, for example, somebody in the company is doing certain things, maybe inflating assets or doing things that are unethical, employees of the organizations are empowered to blow whistle and say, hey, this person is doing something that could affect the reputation of our organization. So when we take it to that level, we foster reliability and, investors have confidence in us. So by prioritizing transparency and integrity in financial reporting, companies can build trust with stakeholders and maintain a positive reputation and contribute to a healthy and sustainable business environment. So it's all about doing the right things and upholding ethical standards in the reporting process.
Yeah.
Thank you very much.
Subscribe to our YouTube channel.